In 2005, a Statistics Canada survey found that nearly 75% of Canadian workplaces provided non-wage benefits to employees, mainly through group insurance plans. Because many of these plans also cover employees' families, millions of Canadians are covered by some form of group benefits, with life insurance, extended health insurance, and disability insurance being the most common. Group insurance basics. Unlike individual insurance, group members are automatically covered upon joining a plan, provided they are actively at work. Since specific health data for each member isn't usually available, insurance companies rely on general actuarial statistics and the group's past claims experience to set premiums. To do this effectively, the insurer needs to understand the group's composition, the nature of the business, and the experience of similar businesses. Group composition. Several factors about the group's makeup are considered when underwriting, as they determine coverage and premiums. These factors include number of members. For small groups, 25 or fewer members, the law of large numbers doesn't apply, making their claims experience unreliable for predicting future costs. Consequently, smaller groups may face higher premiums or have their experience pooled with other similar small groups for pricing. Larger groups, with thousands of members, spread the risk more widely, and their claims data is more likely to match actuarial assumptions, leading to more accurate premium rates. Age and gender. These are important risk factors for certain claims, like disability and long-term care. For example, a group with more female members will likely file more health and disability claims than a predominantly male group. Similarly, older groups are more prone to filing claims for drugs and long-term care than younger groups. The age and gender mix can influence the types of benefits offered and their pricing. Turnover rate. A group's turnover rate, the percentage of members expected to leave and be replaced each year, helps insurers predict the group's future composition. Groups with a low turnover rate, 5 to 10% annually, are more attractive to insurers because their past claims experience is a more credible predictor of future claims, allowing premiums to be largely based on that history. Conversely, high turnover rates decrease the value of past claims data, leading to higher premiums and longer waiting periods for benefits like disability and long-term care. Nature of the business. For employer-employee groups, the type of business is a key factor in determining benefits and premiums. A construction company, for instance, exposes employees to greater physical risks than an office-based firm. However, some white-collar jobs might involve long hours and stress, leading to more claims. Certain occupations, like architects, have historically low disability claim rates due to their low-risk work environment. Comparative businesses. When a group is new to insurance or too small to have reliable claims data, insurance companies may look at the experience of comparable businesses in the same industry to estimate future claims and set premiums. Employee data sheet. The Employee Census Report, completed by the employer, provides a variety of information used to project claims and determine plan costs. Key data points include date of birth, helps determine eligibility for benefits, e.g., long-term disability often terminates at age 65, and the group's overall age mix. Gender, influences the pricing of benefits like disability income replacement. Occupation/occupational class. Some plans offer different benefit packages for different employee classes, e.g., executives versus factory workers, so knowing an employee's classification is crucial. List of dependents. Required if the plan covers spouses and children. Social insurance number, used for reporting taxable premiums or benefits. Salary/earnings, determines benefits for disability income replacement coverage. Products and services. Group insurance plans offer a variety of coverages. Main coverages. Disability income replacement insurance includes both short-term disability, STD, and long-term disability, LTD. Extended health benefits, such as prescription drug plans, vision care, and dental coverage. Accidental death and dismemberment, AD&D. Critical illness, less common. Long-term care, less common. Employee assistance plans, EAPs. Group plans may also offer EAPs, a benefit not available through individual contracts. EAPs provide confidential counseling services for personal or work-related issues that might negatively impact an employee's job performance. These services can include psychological counseling, available through a 24-hour hotline or in-person sessions to help with work-related stress or psychological disorders. Addiction counseling provides limited professional help for drug or alcohol problems. Marriage counseling helps with marital stress from issues like infidelity or financial problems. Legal counseling offers access to prepaid legal services for matters such as divorce, wills, or debt problems. EAP premiums are based on the group's experience rating and are tax-deductible for the employer. Benefits are not a taxable benefit for counseling related to physical or mental health, retirement, financial counseling, or employment placement. However, Benefits for legal or financial counseling are generally considered a taxable benefit. Group insurer and broker services. Beyond providing coverage, insurers offer administrative services, and brokers help clients navigate the market. Insurer administrative services. Plan member enrollment. The employer is responsible for enrolling employees, often after a waiting period, e.g., 3 months. For contributory plans, there may be a limited period for employees to decide whether to join. Premium billing. For non-contributory plans, the insurer bills the employer for the total premium. For contributory plans, the insurer bills the employer for their portion and advises them on the amount to payroll deduct from each employee for their share. Claims adjudication. The insurer reviews, approves, or denies, and pays claims according to the contract terms. This can involve gathering additional evidence and monitoring ongoing claims, like those for disability or long-term care. Group broker services. A group broker's main role is to solicit group quotes for clients. They gather data on the group's makeup and past claims experience, then approach various providers for quotes. The broker's expertise lies in knowing which providers are a good fit for a particular type of group. They present the quotes to the client, make recommendations, and act as a liaison between the client and the chosen insurer. Coverage and plan evaluation. When a group sponsor considers shopping for a new plan, they're often motivated by price, a desire for additional or more flexible benefits, or dissatisfaction with service. A broker will evaluate the existing plan's coverage, claims experience, and the client's satisfaction with the current provider. New plan design. A new plan should be carefully compared to the existing one, not just on price, but on the specifics of the coverage. Key elements to compare include disability benefits, the definition of disability, weighting and benefit periods, percentage of income covered, and availability of rehabilitation services. Extended health benefits, services covered, maximum benefits, and coinsurance factors. Drug benefits, deductibles, coinsurance, drugs covered, e.g., brand name or generic, and payment basis, pay direct or reimbursement. Other coverages, maximums, waiting periods, and covered services for dental, vision care, long-term care, and critical illness. Funding formulas. Group insurance can be funded in 3 ways. Non-refund accounting. The insurer bears full financial responsibility for claims and sets premiums based on anticipated costs. The employer has no liability if claims exceed the estimate, but there's no refund if claims are lower. Refund accounting. A form of participating insurance where premiums are based on the group's claims experience. The employer may get a partial refund if claims are lower than expected, but the insurer can recoup losses at renewal if claims are higher. This is also known as retention accounting. Administrative services only. ASO. The insurer only handles administrative functions, such as record keeping and claims adjudication, while the plan sponsor, the employer, assumes all the risk and costs of paying claims. ASO plans are suitable for large organizations with substantial assets and cash flow. Premium payment responsibility. Plans can be contributory, where the employer and employee share premium costs, or non-contributory, where the employer pays all premiums. Group association plans are typically fully contributory. In non-contributory plans, participation is usually mandatory for all qualifying employees, with little opportunity to vary benefits. Contributory plans typically make participation optional, but require a minimum percentage of employees to sign up, offering more freedom in benefit selection. Costs and claims administration. Premium rates and costs. Group premiums are influenced by several factors. Group makeup, the number of members, average age, gender, and turnover rate all impact the insurer's ability to estimate claims, with smaller groups often facing higher rates. Nature of the business. The level of risk employees are exposed to affects premium pricing. Benefits offered. More comprehensive coverage generally results in higher premiums. Past claims experience. Insurers use this to predict future claims and set premiums, which can be done through manual rating, based on similar groups, experience rating, based on the group's own history, or a blended rating, a combination of both. Credibility is a measure of how reliable past claims experience is in predicting future claims. A large, stable group with low turnover will have high credibility, while a small group with a high turnover rate will have low credibility. Taxation and registration. Long-term disability premiums. Employer-paid group premiums are tax-deductible for the employer. If the employer pays 100% of the premium, disability benefits are taxable income for the employee. If the employee pays 100%, benefits are tax-free, but the employee cannot deduct the premiums. In shared premium plans, a portion of the benefits equal to the employee's aggregate premium payments is tax-free. Short-term disability plan registration. If an employer's STD coverage is equal to or better than the federal employment insurance, EI, sickness benefit, they can register the plan with Employment and Social Development Canada, ESDC, to receive a partial reduction in their EI premiums. Group premium tax. All group accident and sickness premiums are subject to a provincial premium tax, typically 2 to 3% of the net premium. This tax is included in the quoted premium. Claims administration. The claims administration process involves several steps: receiving the claim, verifying the plan and member's status, determining if the claimed item is covered, adjudicating the claim, and making the appropriate payment. For periodic payments, e.g., disability claims, the insurer must also monitor the claim to ensure the member still qualifies for benefits. Coordination of benefits, COB. Most group plans have a COB clause to determine which plan pays first when a claimant has coverage under two plans, e.g., their own and a spouse's. The rules are straightforward. The plan covering the claimant as the primary insured is the first payer. The spouse's plan, which covers the claimant via family coverage, becomes the second payer. The second payer pays the lesser of what it would have paid as the primary insurer or the remaining expense after the first plan has paid. For claims on behalf of children, the first payer is the plan of the parent whose birthday is earliest in the calendar year. Agent's role. An agent's involvement can range from simply introducing a prospect to an insurer's representative to being actively involved in the sales and service process. Ongoing service. For agents actively involved, their responsibilities include staying updated on the client's needs, serving as a liaison with the insurance company, and contacting the client before the annual renewal date to discuss plan modifications or shopping for new quotes. Documentation. It's vital for an agent to document every step of the service process to protect themselves, the client, and the insurer. This includes documenting initial contact, meetings, actions taken, and how issues were resolved. All written communications, including quotes and emails, should be kept on file, along with written records of phone conversations. These records are crucial for ensuring proper service and for any future legal disputes.